Hi, everybody. How are you doing? How are you, Silvan?
Hello, hello. Very good, very good.
Where are you these days?
Right now, I live in Bangkok, Thailand. Uh, yeah, for the last 2 years.
Cool. How's the weather like?
Very hot at the moment. It's the hottest time of the year. It's about 39 Celsius usually on the daytime.
Oh,
So
wow.
very hot.
I hope the AC equipment is good over there.
Yeah, yeah. Definitely use the AC every day.
Yeah, so we are gonna talk about DeFi and stuff like that, but I know that you are also involved in so many other interesting things besides DeFi that I would really love you to introduce yourself and like spend 5 minutes sharing about everything that you do and what keeps you excited day and
Nice.
night.
Yeah. Yeah, I'll go a little bit of my background and then what I'm working on right now. So I was born and raised in the Dominican Republic. My parents are German, that's why I don't look Dominican. But however, I finished high school in Thailand, where I did meet the royal family of Bhutan and Nepal, which makes sense later on in the story. But I built my first website around 13 years old, and it was basically Poems for D, where I sold poems and gave free consultation advice, which was like a reverse business model for a 13-year-old. But my parents were impressed that I built a website. So then I built a website for my parents who own a hotel business in the Dominican Republic and then other small businesses. I went to college. After a semester, I realized that it wasn't for me because I was already building mobile apps at the time for small businesses. Then I moved to New Zealand and found myself working for Noma Solutions, where I built mortgage and deposit software for banks, so tier one and tier two banks in New Zealand and Australia. I then moved on to software service for a little bit, and then I joined Exodus, which is a non-custodial wallet, as a technical writer. So I understood like the infrastructure of how cryptocurrency non-custodial wallets work, and then I joined as a senior software engineer full stack at Blockchains Inc. We're building a multi-sig solution, their non-custodial custodial wallet, and basically we're a team of 6 people. So I decided to jump on my own ventures and built Flash Loan Arbitrage and NFT project at the time. But in the last year, I've been focused on the Almazeus, which is our Flash Loan Arbitrage project, which we can dive into a little bit. As well, last year we hosted our first royal family office trip in the Kingdom of Bhutan for 8 to 10 days, which hosted about 14 people. We had billionaire, we had Prince Lawrence of the Medici, we had a few family offices, few thought leaders, few millionaires, just meeting the royal family, the prime ministers and delegates there for 8 days, experiencing the culture and trying to help the economy of Bhutan and working with the government's officials there. So we're doing that yearly. We're also hosting that with Ian Arden this year, co-hosting, and we're also thinking of inviting Prince from Ethiopia through Sir Charles Mundy and other delegates from India to join this next October trip. Other than that, with family offices, we do tier one banking instruments, access to when we have tier one banking offers from JP Morgan or Barclays or HSBC. So those are more instruments that family offices are interested in. And then we also do a $500 million marina city in the Dominican Republic with my parents. So they own a large amount of land in the Dominican Republic, and family offices are bringing the liquidity to build a $500 million city next to a river and oceanfront. Yeah,
That's impressive. And look, frankly speaking, every time I talk to you, I'm under an impression that you are from the royal family yourself. That's how noble you are.
that's awesome. I appreciate that.
Yeah, what I can also admire, like how you do business. How you always stick to your word. I think that's the priciest, like the most precious and important trait for everybody. In my life, I've known people like quite seasoned guys who are like over 50, over 60 years old, and some of them they almost like went away from like $1 billion, but if they would get this $1 billion, they would need to make some moral compromises. So
Right.
they they value their name more than the $1 billion.
That's true.
Yeah, that got me. Actually, that's how I learned that probably like your name is the most important thing you have in your life. That's for sure.
That's very true, and I take that to heart because all of my social media, Telegram, everything is my full name, right? Because it's like my name is what I have for the rest of my life. And sometimes I meet anonymous crypto guys that after an hour of talking to them, they're like, "By the way, my real name's John," and I'm like, "Well, my real name is what you see on social media." So there you go. Because I believe, yeah, your name is your value and what you hold to the rest of days. And my father also taught me about honesty. If you're honest throughout your career, business, and life, it's very easy to keep track of what you're saying and what you're doing, especially when you're talking to multiple people, because there are no surprises with the truth.
Yeah. All right. So you're doing these things on the side, which are really impressive. The royal family trips and a lot of networking there. Then you've got a project in Caribbeans. You're doing something interesting in Thailand as well.
Yeah.
But so let's now deep dive into what you're doing in DeFi.
Yeah.
We have a question from the audience. So what's the name of the company? I missed that. It's by Alvaro Ramirez.
Yeah, so the company name is Kensho Tech Lab, so kenshotech.com. But our main product is Almazeus. It's almazeus.com. That's our DeFi flash loan arbitrage bot, which we'll dive into now, and the availabilities in the market and what we actually do compared to other bots and algorithms in the space. So essentially, what we do is we take advantage of arbitrage opportunities for token price discrepancies across multiple exchanges and multiple tokens. So we're technically an MEV bot, but we're not really because we don't depend on validators because we use flash loans, smart contracts to execute on our transactions instead of validators using our own funds to execute transactions. So it's a little bit different, and it's also ethically good in the market because it's very sustainable and scalable. So it's not very harming anyone. And we'll go through different methods of flash loan attacks, flash loan arbitrage trading, sandwich attacks, which are unethical and unhealthy for the market compared to what we're doing. But essentially, what we do is why we focus on arbitrage opportunities is because there's always volatility in the decentralized exchanges. And due to that volatility, there's price discrepancies. And we're essentially kind of healthy for the market because we're solidifying that price discrepancy and creating more stability in the marketplace by taking advantage of that price discrepancy in the market slippage rate instead of manipulating the price and taking from users or from liquidity pools. So it is sustainable in the way where you stay in the market slippage rate, which is very, very important. Now, arbitrage trades are made in the onboarding and offboarding, and the swaps made between the crypto exchanges. And in our case, when we onboard, we borrow from liquidity pools, let's say from a stable coin, and then switch it to Ethereum, and then swap it to another exchange with another token, and then from that token to another exchange with another token, and then back to the stable coin to then pay back the flash loan that we borrowed. And the profits that's left over is sent to our smart contract, which is then distributed to all of our partners. Right. So essentially, what MedBots do is take opportunity of the future transactions. Right. So there's a mempool, and mempool Ventures probably know what it is, but it's essentially a database or a memory pool of transactions that haven't been complete yet. So it's basically pending transactions that Node keeps. And it's very public and it's very visible for anyone to track. And therefore, MEV bots trade by taking advantages in the marketplace. You can take advantages like we do in arbitrage price discrepancies, right? And we use flash loans instead of validators. So it's more ethical in terms of how we're doing the transactions because we're not, front running anyone or doing sandwich attacks. We can also do collateral swaps and liquidization, which collateral swaps, for example, allow you to change the collateral in one exchange that you have collateralized in the token position using flash loans to then recollateralize your position in another exchange or self-liquidate your position so you pay less a fee using the flash loan and pay the flash loan fee.
Okay, you need to break this down. I think not everyone knows what flash loan is, so why don't
Okay.
we take it slow and like share a little bit about like what arbitrage is, what are the
Okay.
types of these discrepancies that you are leveraging, because it's not only the price itself, is it? And then get into the flash loans.
Right. So it's not only the price discrepancy, but also the price that you can profit from the different swaps of different exchanges. Right. And flash loans, essentially what it is, it's a smart contract written solidity where you can borrow from liquidity pools like Aave, for example, which has like $1 billion or several billions of dollars in their liquidity pool with multiple tokens. And whatever they have in those tokens for that build up that liquidity pool, I can borrow the maximum amount of those tokens per transaction. And so I can essentially borrow hundreds of millions of dollars, but I have to pay it back with a fee in the same block transaction. So if I'm unable to pay it back with a fee in the same block, which is 12 seconds in Ethereum, then the transaction is reverted and I'm lost with the gas fee that I paid to call that function on the smart contract to borrow from the liquidity and execute it. You also have to take into consideration the gas fee of deploying the smart contract on mainnet, which is about $100, and then deploying the functions to call the transactions to borrow from liquidity and make a trade. Now, once you complete that trade, you paid gas fee and it's a success, right? So if you paid $20 gas fee and the success made you $8 profit, you actually lost $12 because you paid more on gas fee than the transaction actually profited you, which is why we also try to scan and make profitable opportunities that are over $50 because usually gas fees around $20, $25, $30. And if it gets higher, then essentially we try to take into account real-time gas prices or high volumes in gas. You can also leverage things like gas tokens where you buy gas credits and you can use them in times where gas prices are higher and also mitigate risks for being front-run using gas credits. So there's a lot of benefits to that as well. But yeah, so essentially flash loans is borrowing liquidity using smart contracts to be able to make transactions. The beauty of it is that we're able to make 9 different transactions across multiple decentralized exchanges using multiple tokens within 3 to 5 seconds, all using smart contracts. You can't do those kinds of trades like clicking buttons and doing centralized exchange arbitrage. This is very specific in finding opportunities across multiple exchanges using multiple tokens, which we analyze 1,000 different dynamic token pairs in 500 milliseconds. We find opportunities and execute that using smart contracts, flash loans, and flash swaps to do multiple transactions and then use those profits to send to our smart contract to be distributed to partners. So that's the leverage that we use with smart contracts and the arbitrage opportunities in the marketplace.
Oh, that's really cool. Like so many exchanges that you're tracking. And I assume you're also like following the space of DeFi trading and some real degenerate transactions. Can you share a little bit about like what's been the most interesting out there?
Yeah, I mean, in terms of interesting, everyone really looks at those flash loan attacks where people make hundreds of millions of dollars. And usually they're a sponsored group. One of the sponsored group is actually a North Korean sponsored group, which does the most flash loan attacks at the highest volumes, the most sophisticated attacks. They do multiple flash loans in one attack to be able to leverage the most amount of profit by moving liquidity, creating their own volatility, manipulating the pricing oracle, pricing of certain exchanges with those tokens that they've listed, and then taking another flash loan with another large amounts of liquidity to take advantage of the pricing manipulation they just created with the first flash loan, right? So essentially, a flash loan attack, you are taking funds from a liquidity, or you're doing sandwich attacks, which are MEV bot doing sandwich attacks. They are basically manipulating the price in a meme pool for pending transactions before the swap or trade is happening to increase the slippage rate, and then after selling it back to the same user doing the swap at a higher price, and therefore doing a sandwich attack by benefiting before and after. So it's a total of 3 transactions, 2 of them doing the MEV bot before and after. And then there's also front running, where you're basically copying people's transaction and just paying a higher gas fee, or executing it faster using validators to front run on someone's opportunity where their transaction would be reverted, they'd be lost with the gas fee they paid, or you take the opportunity that the user had. So those sandwich attacks, front running is very unethical, which is why we don't focus on that, even though there are profits there. But the most interesting ones are definitely the 100 million ones, which is also unethical, which is why we are focused on arbitrage, decentralized exchange, for cyclical arbitrage, because it's very scalable. So it's $1 billion a month in arbitrage opportunities in average. In bear market, it's $24 million a day. In bull market, it's about $240 million a day. So just having 1% of market share, you're still doing very good. And our goal is to get $300 million a year. And in full bull market, it's $240 million a day. So that's very, very attainable and very, very sustainable. So I guess that's the most exciting, because it's an ethical way of getting part of that market share.
Wow, that's a lot of money to be made. Yeah. Are you facing a lot of competition?
Yeah, so there is definitely a lot of competition with MEV bots. The reason why there's a lot of interest and why we've received a lot of cold emails, like from GDA Capital, BU Capital, and SMO Capital, that cold emailed us, and a lot of other quant traders, is because we're able to analyze in 500 milliseconds 1,000 dynamic token pairs, but also because we're using flash loans to execute those trades. We could theoretically put our algorithm and a smart contract with funds in it and have different validators transact for us instead of using flash loans. But because we use flash loans and we could do 9 multiple trades all within 3 to 5 seconds, it's very difficult to front run us unless you're doing the same method, and you can track our company's wallet, our smart contracts, which is very difficult to do. And there's mitigations you can take for that. So I guess in terms of competition, we see that even if someone has 15% market share and making billions of dollars, that still won't affect our possibility of making 300 million a year, because there's just so much pie to share.
What do you think about the future of the DeFi trading? Like, do you think that DeFi will eat the traditional trades? Do you think there is a place for like HFT and stuff like that?
Yeah, I mean, I personally believe that the only big centralized exchange that would, I guess, survive over time would be the ones that governments try to institutionalize, like Russia or US or China, or the ones, or the digital currencies that they are deploying, whether that's in the blockchain or not, or centralized or not. But the point is, all centralized exchanges traditionally follow the traditional banking system, which is fractional reserve, which is what FTX did, which means they don't have to keep the liquidity of what their depositors gave them. They only keep like 1/10, and the rest of it they give out loans and invest and do other programs to make money for that institution. And so unless a centralized exchange is run like a decentralized exchange, where you put the funds of users somewhere very secure and unhackable, then in turn, I don't believe that centralized exchange would be there in the next 10, 20 years, or at least a certain company alive 20 years later. Maybe there still will be centralized exchanges, institutional ones that are adopted by governments. But I feel like decentralized exchange will see more volumes, especially when education reaches the masses, where people understand that holding a cold storage is more important, and then managing that cold storage using decentralized exchanges, doing swaps and changing wealth between different decentralized exchanges, because right now there's also a lot of volume between people who want to liquidate crypto capital or buy crypto capital but don't want to go through a KYC process. So how do you solve for those issues without getting into any legal battles? So at the same time, I feel like there's a demand for decentralized exchanges, because it does give power to the people, but at the same time, it has a structure so no one can corrupt that, or there's no manipulation in the founders of that decentralized exchange to take everyone's funds, because they can't at the end of the day.
Interesting. By the way, I've spoken to Danny today. Do you remember him? He was on Memple Reload with us.
Yeah.
He's building something cool as well, which is the options, if I get it right, like the option, like decentralized options platform, which is also like P2P, gasless, has many interesting concepts to it. And frankly, like I'm impressed with how much money can be still made, even with stable coins in the decentralized finance world, regardless of the market conditions.
Yeah, exactly. And those are some of the token pairs we do look for as well, because stable coins are essentially a pegged currency, quote unquote, that decentralized exchanges also have difficulties, controlling in their pricing oracles, and having that delta resolved between different decentralized exchanges that have their own pricing oracles. Even though they take account multiple pricing oracles, it still has to sync up with their own, because that would be truly decentralized. And there are solutions where people are talking about aggregating those pricing oracles, like Chainlink is doing for centralized exchanges. But then that would defeat the purpose of being a decentralized exchange at the end of the day. And then, as well as a decentralized exchange monopolizing the arbitrage trades of the deltas of the price discrepancies, that also makes it centralized and monopolizes those opportunities for the ones that control it, which I don't think will happen across all dexes that exist out there. So yeah, I would 100% look into stable coins like DAI, USDC, USDT, for arbitrage opportunities in the market with other token pairs, with those stable coins. 100%.
All right, cool. I know you're talking to other VCs as well. So of course, Memple Ventures has invested with its sweat and blood.
Yeah.
And we are happy how everything is panning out in terms of us working together. Our Solidity team is really excited about this because that's a challenge that they love taking. Like oftentimes, you as a developer will end up working on, a pretty simple and mediocre task. Of course, at Applicator, like we've always had interesting challenges. For example, like 2 years back, we built one of the largest protocols on Ethereum network.
Yeah.
It was so big that its code barely fitted the file size limits of Ethereum, and we had to like refactor the code, remove some functionality, or rename the variables in order to really fit the file size limits, as well as there were the block gas limits that we also were almost not able to fit in. Like that big the solution was. It's one of the largest decentralized insurance platforms on Earth, and currently existing in the market. Yeah, never been hacked, by the way.
Nice. That's very good.
Hacked.
That's good.
Yeah, we had we built the two internal layers of testing. First of all, the developers have tested their own code, covered them with tests, and then we had a totally separate quality assurance division that was like creating all the simulations and mathematic model from scratch, and were writing their own sets of tests. Only then did we push it out to the external world and to the external auditors to audit this. So definitely, like I'd say what we are working on together is definitely of the same caliber in terms of how interesting it is to developers. So we are excited about that. But
Yeah.
I was curious to learn more about your recent investor um, kind of pulse, if you will. Like how do you assess the market temperature? Have you met any interesting investors, and what are the questions that they are asking you?
Yeah, I mean, 100% in the last 6 months, a lot of the investors that have capital have not been deploying, mostly, especially in crypto space because of FTX. Even though before FTX happened and during it, people said, have you found difficulty? I mean, it just depends on the fear risk factor of the investor. But at the end of the day, I've been telling everyone that centralized exchange is the way of corruption, and decentralized exchange is the way of finance in the future. I always had that mentality. But recently, I feel that because of SVB and other institutional banks failing, that's another reason why other people haven't deployed capital. I know there was about 3 investors, angel investors, that committed about 100,000 to the flash loan, but then they pulled out shortly after the SVB crash. They said they want to hold on to their liquidity, which I believe is a mistake if it's in US dollar. Um, and yeah, so, but however, there are VCs at the moment deploying capital, the ones that are very liquid. But however, I feel like about 60% are still reserving and still reevaluating the market before deploying capital, because they're also unsure about where the U.S. markets is going and how that will affect the crypto space. But yeah, I feel like everyone's also looking towards the halving of Bitcoin and what influence that will have in the market, and also the introductions to CBDCs this November and in July, with the Fed coin being released. But yeah, so it's interesting to see the market, and that's where I believe the investors are also uh, holding on to the capital and seeing where the market's going, and only those with very liquid capital are actually deploying into the crypto space. A lot of family offices are also looking at different ways they can do wealth generation and deploying capital into VC, but also looking at other sustainable models to invest your capital in.
Yeah, yeah. My situation here in Abu Dhabi is that many of my local friends, they are crypto is too small for them. All in all, they're
Yeah,
like, come back when your deal is like above 50 million and stuff like that.
yeah, yeah. There's a lot of people that um, play in that ballpark. For example, there's a family office that are funding our Marina City. They do infrastructure projects starting at 500 million up to 5 billion, right? So unless and our project was 100 million to 500 million. So we're just in that
You're
sweet
so
spot.
small.
we're like nothing for them. And then there are VCs raising $50 million, like you said, and there's some family offices that won't write checks under $50 million. But then they also don't want to be the only ones. So if you're only raising 50, they're not going to give you a $50 million check. So you have to raise at least 150 to get 2 other parties involved or more, so that they know that they're not the only ones involved. But yeah, you have to have deal flows for everyone. Like, for example, a week ago, a deal flow found on my lap was 50 metric tons of soy, animal feed, and stuff like that, and peanuts, which we found and deployed. And just being able to connect the dots and connecting people who can find a source for that huge quantity for someone in China requesting it, um, then we get a commission from that deal and future deals. So, it's always interesting to have bigger deals and small deals depending on which shark you're talking to.
Yeah, totally. Um, as the already successful entrepreneur in DeFi and blockchain space, what advice would you give to the starting entrepreneurs? What should they pay attention to?
Yeah, I would say definitely pay attention to reading um, the smart contracts of the tokens they're investing into, understanding the market, not just jumping into hype, understanding, the Bitcoin, uh, smart contract, and understanding the different networks that are at play, the different players coming in, uh, looking at the bigger picture also, where the financial world is going. What deals are China, Russia, India doing together? Like, where's the U.S. market? Where would be a safe place to put your investments in, or learn, your skills in either development or in the DeFi space, but targeting it where it would be valid in 5 to 10 years, where the market is actually headed. Because if you're just starting, you want to make sure that you're learning the right material that's not outdated, and that you're staying ahead of the market, so that as you're gaining experience, your experience is in demand within 3 to 5 years, more and more. Because even now, Solidity developers are in demand because of the scarcity of Solidity developers, even though they're becoming more and more frequent or more readily available. But the very good ones are very difficult to find. So I would say focus on definitely smart contract development, look at different blockchain alternatives and their development tools, and develop your skills that would be in demand in 3 to 5 years in those blockchain spaces that will be here in 3 to 5 years.
Totally. You've mentioned the global trends, and I'm more and more into geopolitics these days, at least from the perspective of like, what is crypto's role on Earth altogether? Because I think the answer to this question will unlock understanding of how big Web3 can actually be.
Yeah.
Are you into any conspiracy theories?
Yeah, 100% into conspiracy theories. And
Hmm.
you also meet a lot of interesting people that can confirm nor deny, or give you more insight on conspiracy theories, right? From their experience in several governments and stuff like that. But essentially, geopolitics and crypto is very interesting, especially in terms of what you see in real world scenarios, like the Ukraine and Russian war. It was very difficult to move money around, or even moving different countries and then having money or valuables move to a different country was very difficult. Those that had crypto was and moved countries because of the war, it happened so fast that the crypto that they had was the only thing that they had access to, and it was the only thing that fed them and kept their families alive. Same thing with the Lebanon banks in Africa. Once they shut down because the ATM stopped working, withdrawals stopped working, and there was a huge uprising. And that's when they saw a huge spike increase of people downloading decentralized exchange, buying Bitcoin in Lebanon when those banks failed. And even local exchanges had higher prices in Bitcoin, right? And this is an example of location arbitrage on centralized exchanges, where you can find geopolitical arbitrage opportunities, because in that area there's a huge demand for like Ethereum and Bitcoin. So you can sell to that country that has a huge demand and buy it for a lower price in another exchange in another country. Just finding a way to providing that liquidity in that exchange locally in that country, right? Which is the task on its own, and how you profit. But yeah, so geopolitics and crypto, I think, is very tied in together, especially because once major banks in the U.S. or U.S. currency as a whole will start failing. Because if you think about it, the U.S. currency is a 50-year experiment, and currencies have, if you look at the history of thousands of years, have always have a tendency to fail. So if you think about it, it's not unlikely that the U.S. dollar will collapse. Will it be the end of the world? Probably not. Maybe they'll have another solution called the Fed coin, or it would be named whatever else, right? And then they'll have a different value system. Right now, they're creating more spiraling debt with a fractional reserve system. And now all the other government powers are trending away from the US, which gives less power to the US currency, less buying power, and less administrative power for the US government to tell countries that they can't do business together. they're basically saying, no, we will do business together regardless of what you say, which gives the US even less of economic power in the global realm. So you'll see a lot of people having 100K, 200K in their bank account in the US. Once shit starts to fan, you'll see a lot of them try to move that money into the crypto space because they'll just see that as a tool to move their money once they like go to Belize or Puerto Rico or South America or Europe, and then figure out how to liquidate that crypto into physical cash once they move to their other location. I feel like some people might just keep it there temporarily and then liquidate it with the new system, right? Or digital currency that's introduced. But you'll definitely see a lot of volatility, whether that's moving capital, whether people that's keeping capital into crypto, that you will see that movement because you will see a disruption into the real currencies, or I would say government currencies, in the geopolitical space. Yeah.
Yeah, I have my own theories as well in terms of like who is the team of people behind Bitcoin and stuff like that. But these are
Yeah.
assumptions so far. What I'm working on right now is, trying to figure out with some people who may have access to some clues, and that will give me the answer.
Yeah.
Yeah, I'll keep it to myself meanwhile. But I have some great crazy assumptions about like who
So
have
once you
decided
find out,
to.
don't go swimming.
For sure not. For sure not.
Stay ground level. Only stay in villas and houses, and don't go swimming.
Yeah, I don't think I'll be posting about it on LinkedIn or Instagram. No, but that's when we'll definitely meet by the cup of tea and have a profound discussion. Meanwhile, I look forward to our private conversation. I think you booked me in a few days.
Yeah. We were supposed to call today, but I decided to move it a few days because we had a live today.
Good.
So this is kind of a catch up. But yeah, we'll have a further catch up in a few days.
Good. Right. Look forward to that. Thank you for your time today.
Yeah.
It's been a pleasure, and we should repeat this in the future.
Nice. Thank you, Ian. Appreciate you. Have a good one. Thank you, everyone.
Bye.
Bye.